Hey you guys, welcome back to another video. Bro, I just missed the fucking entry point. Bro, what the fuck? I didn't look into it. Dang, bro. What the fuck, bro? I missed my entry point. In this video, I'm gonna explain you guys what liquidity is because I don't think many people understand what liquidity is. So let's just say that you have like 1,000 phones, okay? You have literally 1,000 physical phones that you need to sell. How are you gonna sell that to one person or a group of people in one shot? You need to go to where the buyers are. So you are a seller. So if you need to sell 1,000 iPhones in one shot or a group of people, you need to go where the buyers are. You going to that area is an area of liquidity because there is money in there, so you can exchange your product for the money. So if you see any chart going up and up and up, so it's going to a area where the sellers are. And when it gets there and when the sellers sell their units, the market just keeps coming down. And that is what a liquidity area is, an area where there is liquidity, whether for buyers or sellers. So in this video, I'm gonna show you how you can find the area of liquidity on your chart so that you can be a better trader and improve your trading strategy. And just to let you know guys, this liquidity will make you a better trader in every broker, in every market in the world. So you don't have to leave the video just because this isn't your favorite broker. So just to keep in mind that the liquidity can be a very subjective topic, you know, because according to some people, there are some liquidity above the intermediate high, intermediate low, and according to some people there isn't. So it is a very subjective area, but I'm gonna teach you what I think where the liquidity is. So we're gonna talk about that. As you guys can see in here we have this intermediate high in here, and you can also call this one an intermediate high, but I'll take this one as an intermediate high. So if we say that this one is an intermediate high, so that means that the liquidity in the market is here. So if the market wants to just keep going down from, as you guys can see, we are in a downtrend. So if the market wants to keep going down, it needs to grab liquidity from this area. So when it has grabbed liquidity from this area, it's gonna go down, or it can easily break up, but most likely it's gonna go down. So it needs to come in here so that it can grab some liquidity so that it can continue. It has enough momentum and can continue going down. So I hope you understand. That's why I took this trade as well, and we will just see how does it go. As you all know, I only took this trade just because of the liquidity, as it's a downtrend and you don't want to trade an uptrend in a downtrend. But I took this trade just to show you guys that the market needs to grab this liquidity from here if it wants to keep going down. It needs the momentum, it needs the liquidity to keep going down. So as you guys can see, we have a liquidity grab in here, as I said earlier. This area was a liquidity area. So if the market wants to just keep going down, it needs to touch in this area as it did in here. But the one touch wasn't enough for the market to keep going down. That's why it came back, and this was a retracement. And now that it has touched in the market again, there's a high probability that the market will just keep going down from here. And some people now might ask that if it were to just keep going down, why is this candle coming up now? It's because this candle created FVG in here, so that's why this candle came in to just cover up the FVG and to provide an efficient pricing in the market. So now we will just wait and see how does it go. So as you all know that this candle is an order block here, As I said, this candle is an order block here, and the market can reverse from here, but I personally think that the market will just keep going down and down. As I said, it was an easy win. If you see this, if the market only enters the liquidity area with just a wick, it can go down, but most of the time it just come up for a retracement to just enter the liquidity area again. As I said, this was an order block, and as you guys can see, we have a rejection from here because this is an order block here. So as you guys can see, we had an FVG here, imbalance in the market. You can also say imbalance in the market. As I said, there was an order block here, and that's what just happened. The market just went up from here, but I personally think that this was just to cover up the FVG, and I will just enter for a down trade. As I said, this was just an efficient pricing in the market because the FVG is also known as the imbalance in the market. So there was an inefficient pricing in the market. So this candle, this green candle right here, was just to provide an efficient pricing in the market, and the market will just keep going down and down from here. But as you guys can see, the market doesn't have like much liquidity now. I don't know why, but it just doesn't have much liquidity. So we will just win this trade and we'll move on to the next trade. This candle will just end in a wick because this candle was there to just cover up the wick and provide an efficient pricing. As you guys can see, this candle just provided a wick, and that is an efficient pricing in the market. So it will just keep going down from here, and that's how we will win this trade. As you guys can see, we have won this trade as well. And by the way, if you have any doubts or questions, if you don't understand anything, you can just DM me on the Telegram. Link will be in description. As you guys can see, we have entered this trade. And why we have entered this trade? Because we have a demand zone in here, and where there is a demand more than supply, the price must go up, as you guys can see in here. And when there is more demand than the supply, the price must go up, and that is what happening in here, as you guys can see. So we will just wait and see how does it go. And by the way, I share signal like these in my free Telegram group. So if you want to join, you can join from the link in the description, or the @ is on your screen. And I also share the analysis behind the trades in my free group so that you can understand the market better and be a better trader. So if you want to be a better trader and know the analysis behind the trades that I give in my free group, you can always join our free group. Link will be in the description. So I hope that this short video helped you out with the liquidity, and now you know what liquidity is. So let me just explain one more thing in here. This type of trading can also be known as the discount trading. Okay, so when as you guys can see, the price went up, and then it just came a little bit down, up, down, up. Okay, and then it came down here, and then the people just bought from this price, and then the price went in here, and then it went here. Okay, so let's say this is an iPhone. Okay, so here the iPhone pricing was like $1,000, and a lot of people wanted to buy the new iPhone. Okay, so there was less of the iPhones. Okay, so if there was just less of the iPhones, so that means there was less of the supply, and when there is the less of supply, what happens? The price goes up. And now let's say the iPhone went to $1,100, but now that the most people have bought their iPhone in this price range, the most people have bought their iPhone in here. Okay, the most people have bought their iPhone here. So now and now it's too expensive. It's now $1,100, and people don't want to spend $1,100 for their new iPhone because they can just wait for the sale and they can buy the iPhone for $1,000 in here. So people just don't buy the iPhone. So now what happened? So now there's no demand for the iPhone, and the company is just keep making the phone, so there is more supply in the market. So there are more iPhones in the market, but no one wants the iPhone, so there's no demand. So the price of iPhone drops, and when it comes down to $1,000 mark, the people see it as a discount price, so people just start buying it. So now people started buying it, so it's a demand. So it's a demand zone. So the $1,000 mark is now a demand zone, and now that people want it and there is a lack of supply, the market just keeps going up and it comes down. So this is what discount trading is. So if we just remove everything and I draw a zone in here, and then I draw a line at the 50% mark. So as you guys can see, so now that you can see this price is good for buyers because you are getting the iPhone for $1,000, but this price is bad for the sellers because they can be selling their iPhone for $1,100 in here and they can make more profit. So this zone will be known as the discount zone for buyers and premium zone for the sellers, and opposite to that, this zone will be known as and this is a premium zone for buyers because buyers are paying more price for the iPhone, and it is a good price for sellers to sell because they are making more profit. So this area would be known as a good zone for sellers, and this area would be known as a good zone for buyers to buy. So you can also call it as a discount trading. So I hope you understand. If you don't understand anything, or if you don't agree with some of the things I said, you can just comment on this video and let me know if you disagree with something or if I said something wrong. And if you want me to give you signals, you can always just join our Telegram group. Link will be in the description. And if you want more examples of trading like this, you can check out this video. In this video, I've shown more examples of price action trading so that you can be a better trader. I'll see you in the next video.